Hello, traders. Gary Wagner with the Silver Forecast here. Approximately 9:45 in Honolulu, Hawaii, the 18th day of March. It is Friday, and this is the Daily Report, our weekend review. Silver is trading higher this morning, up around 82.90 cents, currently trading 35.09, 35.07. This, of course, is the bid. As you can see, we have a daily bar chart in which we have our Andrews pitchfork here. And the first thing that I do want to talk about, we touched briefly on this yesterday, but when we take a look at this handle, and the handle, of course, is pretty critical. It will be support and resistance, but if the market truly wants to trade on that channel line, we had this major spike up. And from there, it does seem as though when we got our retracement, as you can see, this is our 50% line retracement. So that we've gotten a very nice, I believe, expected and proper correction here within the parameters. And what I mean within the parameters is that if it's going to maintain its bullish track, and I truly believe that it will, it is going to run within a channel line itself. And when we consider that and we take a look at what we saw last week, where when we hit this top, we believed we had some topping action and we absolutely saw the resistance. In the same way, this week, what we can say is that we are absolutely seeing some support. We are looking at a daily chart, and it is in candlestick but Japanese Henkin Ashi, or Japanese average format. The interesting thing about this daily chart is that we did get a very strong indication that this correction is in fact over, and that's this green candle here. As you know, as the market moves up, you want to look at a couple of things. Body size, you also want to look at wicks. As the market moves down, you also want to do the same thing. But what you will typically get at these pivot points or turning points in the markets are a series of small-bodied candles and then a change in color. Now, we got that change in color today. As you can see, this is our first green candle after 1, 2, 3 days of down Henkin red candles. That is very significant in that what it is telling us is that this corrective stage that we have been witnessing last week does appear, at least on the longer term average charts, which to me is a very good indication because it's very much a lagging indicator, but it gives us a real solid idea of trend and strength of trend. The downtrend has run out of steam, and the trend is shifting, at least tentative. We'll have to see follow through next week, to the upside, meaning we got a green candle. For that reason, next week I would look for a continuation of the market to move back to the upside, and most importantly, to retest these record tops, this 31-year high that we achieved just recently. Traders, we are looking at our daily candlestick chart. We also have our Fibonacci retracement in this chart also, from this significant rally from the bottom to this 31-year high. And of course, what is most interesting in this is twofold. The first thing that I want to pay attention to is the fact that when we got to this 23% retracement level, as you can see, although the lows did go below that, here, and here, the one thing that I found very interesting is that these bodies over the last couple of days, as you can see, were right within those parameters. In other words, they were right within this 23% retracement at 34.26. You can see that it just falls just shy of that. Now, that's the first thing that we want to pay note. The second thing that we want to pay note of is the candlestick pattern that has appeared. I talk about this in gold and have looked for this continuously to tell us that a correction is over, and that is what we call a three-river morning star variation. We absolutely have that, except that what we do have is we have been blessed with a set of double dojis in the center as opposed to one. So you have a very nice pattern forming in which you had the defined downtrend. One, that's the first rule of this. Secondly, you have a large down day. Well, absolutely, we've got that here. You get a small bodied candle or a star, which is in the center. And then, of course, that is followed by a large update or red candle here, and that creates the completion of the Three River Morning Star. As I said, in this case, we're blessed because we had double dojis. You've got 2 days of consolidation within that market. So my sentiment is your confirming candle on this is going to look something like this. In other words, what you look for in this scenario is the following confirming candle. It should open. Of course, you will get a gap because it is Friday now, and so we will get a gap from Friday to Sunday. So you'll get some sort of an open, and then the market will trade higher. And so typically what you look for in this type of a pattern is that follow-through candle on the following day, which gives you the confirmation. Now, we have long positions, so my recommendation obviously is going to be to maintain the long position that we have and also maintain our stop. This has been Gary Wagner wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily report. Bye-bye.